mortgage market changed quite a bit during COVID, and as the restrictions are being lifted, it seems lenders are also changing some of their previous deals. We now have 95% mortgages again, and the rates do seem to be dropping, so stay tuned to find out more. Hello, welcome back to our channel and podcast. My name is Gemma, and here at WS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Iftikhar joining us again. Ifti is a trained accountant and mortgage advisor who's been in the industry for over 10 years, and he is also one of the founding directors here at WIS. Welcome back, Ifti. How are you?
Hi, I'm very well, thank you. Thank you for having me back.
Welcome back.
Thank you.
So for today's video, we're going to be briefly going over what happened during COVID with the rates and how the lenders reacted to the situation, because things have definitely changed. Well, they did change, didn't they?
Oh yeah, it did change a lot. Getting better slightly now, so I think that's good news for sure.
What kind of things did we sort of notice during COVID that changed drastically for us in this industry?
Yeah, so it was a bit funny because what happened was the Chancellor announced that, or the Bank of England announced that the base rate will go down to 0.1%, which sort of levels which I have never seen before. I think with that, what happened was suddenly the rates for people who were on tracker deals, they started to get some good rates because they were already on the tracker deals, and somebody was, say, 1% over base price. They suddenly lost that. I think at the time the rate was about 0.75%. So they lost 65 basis points, which made their monthly mortgage payments much lower than they used to. So that was the initial thing we saw, but that only lasted for a few days. But then obviously banks are always risk averse. They don't take big risks, right? So they got worried a little bit, and they slowly started increasing the interest rates, right? So we saw that happen. I mean, we used to give a deal to a customer today, and 2 days later, we have to give him a revised deal because the rates have already gone up, right? So even before they've collected the document, the rates gone up. And on top of that, what the banks did was, again, they were worried that the property market might drop. And what they did was they went and they changed the minimum deposit requirement. So suddenly the 5% deposit mortgages and the 10% deposit mortgage vanished from the market. And you only had lenders who were offering 15% deposit. And some lenders were only saying 20% deposit. And if you take the buy-to-let market, some of the lenders pulled out products, and some lenders say, sorry, 25% is not enough, we need more than 25%. So everybody went to a back foot, and they were all going back into their shell. So there were lenders who were reluctant to lend, right? So that's what we saw during the early days of the lockdown, right? But obviously, things have changed since, so we are seeing a lot of good things happening now.
Yeah, right, because we're nearing the end of June, and it seems like, again, a lot of things are changing. Yep. So maybe you can just talk us through some of those things that you've noticed about the current rates, because they're definitely dropping, aren't they?
Yeah, they are dropping. Banks are still careful, that's for sure, because they're still not sure, because obviously we have not completely come out of this COVID situation yet. So banks are still careful. For people with a smaller deposit, yes, they are careful. But people who have bigger deposits, surprisingly, we are seeing rates now less than even 1%, right? Some of these rates we've not seen even prior to COVID, right? So, we've seen rates like 1.1, 1.22, but we are now seeing rates as low as 0.95% or 0.99%. It's not just one bank, but there are a few high street banks who are offering. So people who have a bigger deposit, they seem to be getting those rates because banks are a little less worried about those clients because the chances of them going to a negative equity and all that sort of thing is much lesser. So therefore, banks are offering those rates for people at that end. For people who have smaller deposits, like 10% or 5%, they are still offering better rates than what they used to. But some of the rates are still not as good as pre-COVID, right? But rates have definitely got better than what it was during the peak COVID time period as well, right? So we are seeing that. And the good news is, obviously, we are seeing banks offering products with smaller deposits as well. Now that kind of vanished during COVID, right? So we are seeing that come back, right? So that's like thumbs up for the clients who are looking to buy houses, especially for the first time buyers.
Yeah, I was actually going to say that we now have two options for folks who have smaller deposits, because there's the government's 95% mortgage guarantee scheme, but there's also just lenders who are offering 95% mortgages again.
Yeah, that's right.
And I was going to say, maybe we could talk through the differences between using the government scheme and just doing it as a standard 95% mortgage.
Okay.
Are there differences people should be aware of?
Obviously, there is a difference, but it's not a big difference because you might not really notice it. Because what happens is, let's look at just a bank offering you a 95% deposit mortgage. It's just you got to put 5% down, right? But if you took at the government scheme, you just got to put a 5% down as well, right? But the main difference is if you are using the government scheme, the government is backing that scheme, and the government is giving a guarantee to the bank, say up to 80% of the property value. In case property value is down and they are unable to recover the money, they will guarantee. So that's given the bank the confidence to say, okay, right, so we can lend because the government is backing us in case the property market drops, right? So that's what the scheme is about. So that's why you just need to put a 5% deposit, and they say 95% government backed scheme. Whereas with the normal scheme, as far as you're concerned, you're still putting 5% down. So there isn't a big difference between the two from a customer's point of view, because most of these with the government scheme, it happens in the back end, and you're not involved in that. It's just between the government and the bank.
Do you get a slightly better rate when you use the government's backed scheme, or is it the same?
It's quite similar. The rates are not too different, right? So it's very similar. But most of the time what happens is banks who are offering the government scheme, they don't offer separate 5% scheme because they have the government scheme. Most of the time it is the banks who are not in the government scheme who are offering you a 5% deposit mortgage. So rates are pretty similar.
Okay.
At the end of the day, from a customer's point of view, and from our point of view, we look at the best option for the customer. So whatever works best, we go with that, right? But obviously with the government scheme, the conditions might be slightly different. But apart from that, it's very, very similar, the two.
Yeah, okay. And this is kind of more really for like the self-employed folks that are out there. But if their books were quite badly affected by COVID, there wasn't really much that we could do. But now I think that there's lenders that are recognizing COVID happened, and they're kind of offering something, aren't they, for self-employed people? Yes,
not all lenders, but some lenders do. Some lenders have flexed a little bit for people who were affected by the COVID stuff, because some businesses did take a hit, right? But I think we've seen the worst. From what you hear, I think we've seen the worst now. So the banks are aware of it, because some businesses had to shut down for 3 months, 4 months, 6 months, for a period of time, or they had less business during that time. But now with things slowly starting to open up, banks are a little lenient. Some banks, not all the banks, right? Because I was having a conversation with a leading bank the other day. They said they're okay to not consider the latest year's accounts, but look at the other 2 years' accounts. So long as, the numbers at present is looking decent enough, they're happy to look at the mortgage, ignoring the COVID period sort of thing. So we are seeing that happen as well. But like I said, not all banks are doing this. There's a handful of banks, and that is bespoke underwriting, which is not the normal thing as well. So if your circumstances are like that, you probably want to talk to a broker before placing your application, because it's not a blanket thing that all banks will offer you that, right? Some banks will say, no, we just stick to our normal rules. Yeah,
no, but it's a big deal, isn't it? It's going to be really helpful for those people who are worried about that,
Yeah, that's right. It is definitely helpful,
Well, is there anything else that you've noticed that's changed recently that you kind of wanted to let everybody know about?
Yeah, I mean, there are a lot of initiatives that banks are taking. Likewise, the government is supporting some of these schemes as well. I've seen a first-time buyer scheme where a bank is offering 5.5 times your income. Yeah, even at best of times, we haven't seen that, right? Because most banks, they offer 4.5 times income, or maybe 4.75 times income. As exceptions, there might have been a bank who would have done 5 times your income. But that is if your income was quite big, right? Those type of clients benefited from that. But these are aimed for first-time buyers. So 5.5 times your income. Again, there are certain criteria you have to meet. But, a lot of people do qualify for that. So that's a great initiative by a particular bank. And also we can see these income multiples change slightly as well. A lot of banks said, okay, we will sort of look at maybe 4.5 times income. But now they are slowly easing that as well for the other buyers, not just the first-time buyers, but for the others. So we are seeing those things happen. But the biggest change is we can see some of these interest rates drop, and those bigger deposits not being required anymore. You can buy a house with a smaller deposit. So those things are coming back to the market, which is really welcome. Because obviously, the stamp duty holiday.
Yeah. I was just about to say that. This stamp duty's ending soon, isn't it? So
that's right. So
that's might affect the market.
It may, but again, what's happening is it will affect some part of the market, because in June, end of June, the 500,000 stamp duty holiday goes away. But then you still have half for people who are sort of buying between June and September. So you still have the benefit of half of it. But then if you're first time buyers, you have that 300,000 which is stamp duty free. So those things was always there, right? So those schemes are still there. So we will see a little bit of slowdown in the market in certain areas, but then again, because the stamp duty holiday, half the benefit is still there, people are still buying. We still see people buying properties. And also with this introduction of 5% deposit mortgages, we are seeing a little bit of a demand on that side as well. And also, because the interest rates are a little lower, mortgages are becoming a little bit more affordable as well. So we are seeing people come into the market because that. So it's very difficult to say, just because the stamp duty holiday is gone, that, the market may slow down, right? Because we are seeing people come back to the market as well, right? So who knows, it might pick up again, right? So at the moment, the market is, yeah, that's right. The prices are quite high at the minute. So yeah. Hopefully that will continue for people who are sort of owning properties.
Yeah, thanks Ifti. So do you have any other notes you wanted to add, Ifti, before we go?
Yeah, I think mortgages at the beginning is about planning, right? So it's very important that you plan, right? Because you'll be surprised, right? Where some people say, oh, I was on furlough, I don't think I can get a mortgage. Some people say, I can only borrow 4 times my income. It's always good to talk to an advisor who can sort of guide you. Because like I said, it's about planning, right? So you might need a mortgage maybe in 6 months or a year down the line, right? It's always good to plan in advance. Know what you have to work towards, in terms of how to save money for the deposit, or in terms of, how to build your credit score if your credit score has gone bad. And, plan this, right? So I think if you're thinking of buying a property, it may not be a bad time. If interest rates are coming down, we don't know. But, we are seeing some trends, but we don't know. If the interest rates are coming down, and if the government is backing some of these schemes, because the government scheme goes on for 2 years, obviously a few months gone now, but it was open for 2 years. So if you have those schemes, and if you have smaller deposits to put down, it may not be a bad time to buy a property. So plan, right? So even if you're buying a property after a year, the 5% government scheme will be still around, right? So you might as well plan now itself, because you can make best use of it, right? Always leave that last minute rush, right? So because plan these things ahead, and it will always be helpful to you.
Yeah. And I just wanted to say, because I feel like if the viewers have watched our other videos, we do say, talk to a broker quite a lot, but we're not always referencing speak to us. We just mean any broker. Lots of brokers offer free advice, and it's just always worth talking to a professional who is in that industry just to get good advice, and they can talk you through your situation and really advise you on what you can do to make sure you get the most suitable deal. So it really is a good idea to talk to somebody. I wanted to thank everybody again for joining us today. Thank you, Ifti, for your great advice, as always. I wanted to put a reminder out there that these points may or may not be applicable to all borrowers, so please do check with an advisor if you're unsure if these points are suitable for you. If you don't have an advisor, then I will leave our WS contact details below, as we are always happy to help. Another reminder that a mortgage is secured against your home or property, and it can be repossessed if you do not keep up with the mortgage repayments. Thank you once again for joining us today. It's a pleasure. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.